hear the word millage rate. So what's a mill? Have you ever asked yourself that question? What's a mill? Well, this year, the county's net digest is $947 million. That's the gross digest minus all the exemptions that all the homeowners and conservation use people have. So 1 mill for the county is $947,000. So the county's proposing their millage rate to be 9.51, right? So you take that 9.51 and multiply it times that 947,000. That's the amount of tax revenue, property tax revenue that they'll be shooting for. Now that figure changes throughout the year because we have adjustments. You know, values drop. We have added tax revenue that comes in through timber cuts, conservation breaches, all that. So that changes constantly. But that's a good ballpark figure. Same thing for the school, works the same way. Note the city digest. It's only $323 million, which 1 mill equals 323,000. So the city is going up probably 1.2 mills. They're proposing 1.2 mills over their millage rate last year. So you can kind of figure they need about $370,000 more to do what they want to do, pay the bills or whatever. All right, so let's move down to number 5. This is where we start getting into the puzzle pieces that we're going to put together. You heard, if you paid attention, how many of you have been to the city or county public hearings on tax increase? If you've watched on YouTube or whatever, one thing they're talking about is their millage rate and their millage rate only. For example, the city might be saying, well, this is only going to make your tax bill go up $50. Well, that's $50 just on the city side. What about the other parts? A city taxpayer has to pay school tax, they have to pay county tax, and they have to pay joint projects. So when you're looking there at number 5, the county tax, M&O, 9.51. School, they're dropping theirs from 14.01 down to 13.6. The county's joint projects in 2023 on the right side is 2.71. Well, what are they going to be this year? 1.74. The unincorporated services, this is on your tax bill. Last year it was 2.75. This year they're going down to 1.38. So the county's millage rate last year was 6.45. They're wanting to go up to 9.51. That's a little over 3 mills, right? But put the rest of the millage rates on there, the joint projects and unincorporated services, they're coming down. So you take that away from the total, and what do I have out there? 0.34 mills. That's really what the county's millage rate is going up compared to last year. That's really not that bad, okay? Now we're fixing to get to some of the unpleasant parts of the puzzle. The city tax. This year they're proposing 3.91. Last year they were 2.735. Every city taxpayer has to pay county tax because they live in Upson County, right? They have to pay school tax. Everybody in the county pays school tax. The city has a separate joint projects digest. Last year their millage rate was 2.997. They're not changing it, they're leaving it there. So you see what's happening? Their millage rate last year was 26.192. This year the total millage rate is 30.054, an increase of a little over 3.8 mills. How many of you live in the city? You're going to be paying more for a house of the same value that's in the county. simply because you live in the city. And I'm telling you that, you know, because you need to know that. I'm going to be sending bills out in a couple of weeks, hopefully. And I don't want somebody saying, well, your taxes are only going to go up $100, $150, because they're going to go up more than that if you have homestead exemption. I'm going to show you in a minute why. So you with me so far? You see why I want everybody to know the bottom line figure, because, you know, we're getting this information from the city, we're getting information from the county, the school. We're putting all the pieces together tonight to give you that bottom line figure. So let's move on down to number 7. This kind of give you an idea what you're going to be looking at. $150,000 home in the county with a regular homestead exemption. What do I mean when I say regular? Anybody under age 62 that has homestead exemption. How many of you have homestead exemption and you own your own home? If you own your own home and you don't have homestead exemption, you need to get it. I say this every year that I have one of these meetings. There's somebody in this room that is eligible for a tax exemption and they don't have it. I bet my last dollar on it, there's 2 or 3 people in here that don't have it. What do you need to do? Go ahead. Just don't let me forget where I was at. Andy didn't send that out. That came from the tax assessors.
Well, whoever said that.
Okay.
Okay. So it's $500 more, and I asked them. I said, and they said that had to do with the reevaluation or something like that. But I said, man, that's like, 20-30% more.
Yeah.
Showing over here, and then one of the county commissioners questioned me and said, well, that doesn't include, you look over, it doesn't include your homestead exemption. I said, well, I gave you part of mine right here and the exemption right on it. So he said, that's not what you're really paying.
Yeah.
I'm just not getting you.
I'm gonna clear that up about the assessment notices. I'm gonna clear that up about the assessment notices as I get into this, and this is again part of the unpleasant news.
That original one that
Yeah,
I got.
it's gonna change. It might be more, might be less. The millage rates aren't set yet, but I'm going to tell you something in a minute that I want you to be prepared for. So let's get back on. No, it's okay. Let's get back on that $150,000 home in the county with a regular homestead exemption. I did all the math using the proposed millage rate increases. You can't go by what I got here because the millage rates have not been adopted yet, even though I feel pretty sure they'll be adopted. All right, so this is based on proposed millage rate increases. So 2024 taxes this year on a $150,000 home, if you live in the county in your homestead exemption, under age 62, your taxes are going to be $1,450.39. Now, last year, that same $150,000 home, the taxes were only $1,083. You see that parentheses? You see that HTRG in parentheses? Everybody see it? Do you remember what the state did for all the homestead tax exemption people last year? They gave us a break. That was on your tax bill. Everybody that lived in the county, no matter what, you got a $368.28 tax credit. Guess what we're not getting this year? You see why I wanted to have this meeting? That's why your bill said it was, or your assessment notice said it was $500 more, because it was based on last year's millage rate without that homestead tax relief credit, okay? So if I have people from government authorities out here telling the taxpayers that it's only going to go up $150, if you compare it to 2023, it's going to be way more than that. Now, had we not had that credit, and that's why I put that figure down there, without the credit, last year, it would have been $1,451. That same $150,000 home. Now, Andy, why are my 2024 taxes $1 cheaper? Not quite $1. And the millage rate's increasing. If anybody can tell me why, I'll buy you a milkshake and Dairy Queen tonight. Anybody want to take a shot? You remember the new homestead exemptions we got last year that went into effect? Up until last year, the homestead exemptions were $2,000, just on the county side. $2,000 comes off your assessed value. We put in new ones last year, and it went up to $10,000. Now, also in that bill, in that legislation, the county said, hey, let's put in an inflation factor. If the inflation rate is more than 3%, we're going to increase that exemption 3%. So that $10,000 homestead tax exemption you got last year, this year is now $10,300. That's why you're almost $1 cheaper with the millage rates going up. Okay. Now, is that a realistic amount on that $150,000 home? Probably not. Why? Because your values increased this year, right? Our digest increased $50 million, so pretty much everybody's home, land, whatever, increased. So really that $150,000 home in 2023 is probably worth about $157, $158 as far as the tax assessors are concerned. So that's what everybody see how that's put together there. Any questions there about number 7? So also, and this is why the city taxpayers need to know their taxes are going to be more than county taxpayers on the same valued home. Tax on a $150,000 home in the city with the same exemption is going to be $1,678.03 compared to $1,450 in the county. Why? You remember the puzzle pieces up here? The city's joint projects stayed the same. You had to pay full county millage rate, and you had to pay the school millage rate along with the millage rate that the city's going up. That's why the city taxpayers are going to be paying more. The city taxpayers, though, last year, they got a bigger break with that homeowner tax relief. Why? Because they paid 3 tax types that relief applied to: county, school, and city. The county taxpayer only paid the county and the school that they got a break on. So the city got a tax credit, therefore you got a bigger tax credit last year, $417.51. That same $150,000 home without the tax credit would have been $1,479. This year, that same home is going to be $1,678. So what's that? Almost $200 more, right? That is realistic. That's your realistic amount that you're going to be paying in the city, excluding that $417 tax credit. And I know what's going to happen. I'm going to have people coming in the office, my tax bill's wrong. They told me it was only going to be $150 more. And they're going to be looking at 2023's bill. And it's going to be $616 more. Okay? That's what I'm trying to prevent. That's why I'm trying to, educate the people, help them understand this is what's going to happen. What happened last year was great, but it's not happening this year. So be prepared. What's that? I know it. I mean, yeah, I get it. What's that?
That APR,
That was done by the state. That was actually put in by the governor. They had some extra revenue last year. And the governor's administration put it like that. They saw what was happening. I get with you. They saw how these real estate values were going up. And they got to thinking, this is going to be tough. It's going to be tough on the elderly, on fixed income. So they said, we got some extra money, let's help them out. And this applied to homestead only, so that's what they did. And the word was, when they were telling us in all the classes about this, that they possibly have enough money to make it happen the next year, but they said, don't count on it. Well, don't count on it. It didn't happen. You had a question? Homestead tax relief grant. Yep. Homestead tax relief grant. They did it years ago. I think it was in 2008 or something like that. You remember what happened in 2008? The real estate market fell out, right? But it'd be great if they could do it again. Let me tell you what Troup County just did, okay? And I'm sharing this info with you because I'm going to put it out there. Troup County's commissioners, I think yesterday, voted to do pretty much the same thing that the state did for the whole state last year. They voted to do it for Troup County residents, homestead tax relief. They just taken a straight $150 off the tax bill. They had extra revenue in the kitty, and they knew that we're going to be looking at some tough times this year. I don't think they went up on the millage rate, I don't know, but the thing is, they said, hey, you know, we got some extra money, let's help the folks out. That's what they did. So there you go.
when will we start realizing revenue from the liquor store?
You're realizing it now in sales tax. Every penny, every dollar that's spent in Upson County has local option sales tax tied to it that the city and the county split. County gets 65% of it, the city gets 35%. And that's only used for certain projects, okay? You know, and I'm not going to get all in all their business, but this maintenance and operation that you see on the millage rate, the city and the county, that's called maintenance and operation. I think the city calls it operations and maintenance. That's where your property tax revenue goes. And that's why it's confusing. You remember in the advertising, the county was going up 40-something%, city 51-something%, or I got them reversed. It's just on the maintenance operation millage rate that was going up. The Department of Revenue says that in order to get my digest approved, you have to advertise a tax increase. Anything over that rollback rate. The rollback rate, I have to compute every year. It's the millage rate that will draw the same amount of tax revenue as the previous year's tax revenue. So if you have a digest increase like we did, I take the sales tax that the county and the city have, I guess, collected throughout the year, and I roll that off the property tax, and that becomes your rollback rate. So this year's proposed tax millage increase for the city was 51% over their rollback rate. Same thing for the county, 40-something% over their rollback rate. And it's kind of misleading, but that's the way the Department of Revenue makes you advertise it.
So can I add, and you can correct me if I'm wrong, when you say 50%, if you look at the county tax bill and of it was 6-point-something, 50% of that is 3. And I added 3 to the 6, that's where they got the 9. That's how they're coming up with 50%.
Right.
It's already
Right.
6, 50% of that's 3. So
Yeah.
6 plus 3 is
That's the simple way of putting it, right? Yeah. And it's just on that maintenance and operation millage rate, okay? And that's what got everybody up in arms. And they didn't, if you watch the first meeting, the city meeting and the county meeting, what did they talk about? I can't afford 50-something%, you know? That wasn't the whole story. So, you know, it is going to be a lot less than that overall, okay? Any questions so far on that? I did flip over to second page, number 8. I did a $150,000 home for those of us 62 and older, okay? We get a little bit more tax break because of those homestead exemptions. And it's pretty much the same math. That $150,000 home in 2024, you're going to be looking at $1,234 worth of tax. That's what your bill should be. What now? Oh, yeah, 65, I'm sorry. But 62 and older is pretty close to the same thing. We get the school exemption. Once you hit 62, you get $15,000 off your assessed value. So that saves you a lot of money, somewhere around $200 a year just off school taxes. And I know I got a question coming about school tax, okay? And we're going to get to it.
So, when you say age 65 and older, both people on that vineyard property have to be 65 and older?
Just one. Did y'all hear a question? She's asking about the age to qualify for the exemption, right?
Yeah.
Only one person on that deed needs to be 65 and older. You can have a husband or wife younger, as long as somebody on that deed is 65 and older. Yeah. Unless they've changed it, and I don't know about it.
Do you have to file for the age credit?
Yes. When you turn the year after you turn 62, go upstairs. Right now, that's where it's at upstairs. Ain't no telling where it's going to be in a year. Anyway, go upstairs and file for 62 and older. And just remember, when you turn 65, go upstairs again and file for 65 and older. You get a little bit more off your county tax. Question?
Yeah, do you have to do this every year?
No. The only time, just like, use me for an example. Up until the time I turned 62, I had homestead exemption. I did not have to go up every year. When I turned 62, then I go up and apply for it. As long as I don't move from that home. If you move to a new home in the middle of the year, you're not going to get your homestead tax exemption. You got to go upstairs that next year. Who asked me about building a house? Building a house. Where are you at? Built a house, but you were past the deadline for homestead exemption, which was April 1st. You don't get it this year, but be sure you go up next year, right?
L1 being the lowest homestead exemption. Okay, is there an L7 in Upson County?
There is. The difference is income-based.
Okay.
Income-based. If you're retired at 65 and older and you're still working on the side and you're making too much money, and that amount changes every year that you can make, you don't qualify for that school tax exemption. Okay? Call the tax assessors. They're the ones that get it from the department. The Department of Revenue changes that amount every year. I have it. You know, call me at the office and I can give it to you. Uh-huh. There's an L6 and an L7. L6, L5 is regular homestead exemption. L6 is 62 and older, and L7 is 65 and older. Mm-hmm. Yeah. The only difference between the L4 and the L7 is the L7 makes too much money. They don't qualify for the school homestead. Yes, ma'am. You have to present your tax return. When you file for these exemptions, 62 and 65 and older, you have to present your tax return. Yeah. That's how they know. Yeah. I imagine adjusted because that's what your tax return is, adjusted, right? Everybody know what we're talking about? Qualifying for the homestead tax exemption, 65 or 62 and 65 and older. If you make too much money outside of retirement, when I say retirement, things like your pension, Social Security, and all that. If you're out here working on the side and you're making like over $12,000, $15,000 a year, you're not going to qualify for that exemption because the government thinks you're making too much money and you can pay your taxes. What's that?
You have to apply between January and April.
Yep, apply for homestead tax exemptions after January 1st, but before April 1st. Yep. There's a cap. Mm-hmm. There is, yep. Mm-hmm. There is. There's other exemptions too if you don't know about it. And I had somebody ask me about disability exemption earlier from a friend, right? 90-year-old friend. She's totally disabled. What's that? Disability exemption. If you got I'm just calling this off the top of my head, if you have a home around $150,000 and you're totally disabled and you're over age 60, you're over age 65, you probably won't pay any taxes. But, you know, you think about it, you know, disabled, you know, they need a break, right?
What about if you don't file an income tax?
Just tell them you don't file one. You don't have one to, yeah, I mean, yeah, I'd sign you up in a minute. Yeah. Any other questions on all that? We understand the L4. You see how we're saving a little bit more money just by getting those taxes. So what have we learned so far? You put all the pieces together, your taxes are going to be way more this year than they were last year. Had we not got that homestead tax credit last year, they wouldn't be really all that bad, right? A little worse in the city. We got a break last year, but we're paying for it this year, right? Any other questions about all that? Let's get into some legislation that's going to be on the ballot. This is very important. House Bill 581. The first part of it, all right, so what happened in 2022 and 2023, especially 2023, percentage-wise, most homes their value went anywhere from 26 to 35% increase, right? You remember that? You can go back and look at your assessment notices. Unreal. It was unprecedented what happened. Had never happened before. And it didn't happen just in Upson County. It happened everywhere. So, here comes the cavalry. Cavalry's a little late, though, right? Here comes the cavalry, state legislature. Well, from now on, if something like that happens, anybody that has homestead property, we're going to cap it at the max. The max that it can go up is going to be 3%. Okay? That would have been nice. That would have been nice in 2023, wouldn't it? I hope we never have to use it, really. I'd love for things to stay where they are. But this is based on the inflation rate out of the Consumer Price Index. You can look at my examples there. You know, everybody can read. April 2024 inflation rate was 3.4%. So we're getting, if this bill had been in place, it would have locked that increase at 3%. Now, this year's assessment increase, I don't think it's anywhere near 3%. It might be close, but it's not near as bad as it was in 2023. But yeah, that, you know, look down there, the 2023 digest real property value increased 14.9%, okay? The inflation rate was only 4.9%. So if this had been in place, that 14.9 would only have been 3%. For homestead only, not any other property. So that's the state trying to help out the homestead property taxpayer by putting this cap on there. I've heard stuff on social media, boy howdy. Y'all are going up on millage rate right now so you can get all the money you can before the governor or the state says you can only go up 3% on the tax revenue you take in. That is totally false. 3% is the max on this cap on your assessed property, okay? It does not have anything to do with the amount of tax revenue that a governing authority can collect. It's just got twisted, it got out there, and by the time it got to the end, you know, it was a totally different story. The next part is what I really like. You heard me talk about sales tax a while ago. This is where, did you ask a question when it goes into effect? Didn't you just, who asked that? When does this go into effect? Somebody asked it. This is going to be on the ballot in November. If it passes, and it'll probably pass, according to what I was told by the Department of Revenue, your county governing authority has to put it on the ballot next year, and we have to vote on adding that 1 cent sales tax, okay? We got a 1 cent sales tax that's going to be, or the whole bill really, we have to put on the ballot. So this 1 cent sales tax, you heard me talk about the sales tax that I rolled off, the property tax for the county and the city every year. Look at those figures there in that paragraph. Let me read it so we can make sure we understand it. It gives local governments like the county and the city the option of adding a 1 cent sales tax to offset property tax. The county and city already have a 1 cent sales tax in place, local option sales tax. I back it off the maintenance and operation property tax millage rate. In 2023, the county collected $3.028 million in sales tax. I rolled that off the property tax. What am I saying? If we didn't roll it off the property tax, we would have to be paying another $3.028 million in property tax. So the Department of Revenue is saying, hey, Upson County, you got $3 million off this sales tax. You got to roll it off the property tax. You're not going to tax the people for that $3 million. Same thing for the city. The city made just over $2 million off that 1 penny. That 1 penny, that's what they made. Guess when they made the most money ever in sales tax revenue? What happened back in 2020? COVID. What were we doing when COVID hit? What else were we doing? We were spending money, weren't we? Going out to Walmart, you remember there wasn't no toilet paper? You would not believe the amount of sales tax that was taken in. You know, so think about that. It's a good thing. A sales tax is a good thing. There's some people that are kind of opposed to it, and I asked them, why would you be opposed to it? And this is really what matters. Let's say Upson County, we're going to give you another penny. It's going to bring you $3 million in sales tax. What do you have to have in place for it to be good for the taxpayer? You have to have a government in place that's not going to spend that money just because they got it, right? Sometimes people think because you got that money, you got to spend it. And what happens when they do that? They've spent that money, but they got to have more maintenance and operation revenue. What happens? Our property taxes might go up. So, I mean, I might get in trouble for saying this, but you got to make sure you got some people that's going to be in it for the taxpayer, right? And I say that because, number one, I'm a taxpayer. And number two, people walk through my door every day telling me their story of hardship, especially the elderly. So, yeah, you know, I kind of Sometimes people tell me I don't have a soft heart, I have a hard heart because I make you pay your taxes. But, you know, I have a soft heart for those that I know are struggling.
I have a new friend who's 92 years old. She lives in a $350,000 home. It is not paid. It'll be paid when she's 140. So, her taxes are $4,000.
Yeah.
She's never had children, you know, two husbands dead, and, we're trying to struggle to figure out how she's gonna pay this $4,000 tax.
I know. It's a tough situation to be in right now if you're a widow or a widower. You know, you've lost your spouse. Your income's been cut down. What doesn't change? Your taxes aren't going to change. That's a tough situation to be in. I mean, there's possible resolutions to it, but, you know.
I never understood that when you talk about COVID, everybody racing down buying toilet tissue. But you can't go and buy groceries while we buy toilet tissue.
I don't know. It's one of them freak things, you know. There's a toilet paper shortage. Better go get some. I was in line getting it. Matter of fact, I got a spare bedroom that's got 2 or 3 packs in it right now. Right. Also, what was happening, the government was giving us the stimulus money, right? You would not believe, we had a record title registration year. People were going out buying cars with that money, you know, as a down payment. And, I mean, it just really spurned the sales tax revenue.
And that stimulus money comes from the people who pay tax.
Right. On a state level, yeah, or federal level. Well, no, it's going to be voted on. It's got to be put on the ballot. Let me find my paper and get there. This, and this is the bad thing about it. Well, I mean, it's a good thing, but we're going to have to wait on it. It's going to take 3 years before we really reap the benefits from it. This 1 cent sales tax, if it's on the ballot in November. House Bill 581. It's on the ballot in November. If it passes, your governing authority next year is going to say, okay, we're going to do it. We got to put it on the ballot sometime next year. When they'll do it, I don't know. Okay?
So how can you verify that you do this 1% now, you do this 1% now? But how are you going to verify if they don't put it back to the taxes? What guarantee is that?
No, they have to. I mean, there's legislation, there's rules, regulations done by auditors. You got to put it where it goes. Okay? You got to put it where it goes. Just like that. Yeah, just like that local option sales tax we have now, they have to use it for maintenance and operation. And I roll it off the maintenance and operation. Okay, so back to your question about the ballot. It's going to be on the ballot this year. We'll say it's going to pass. The governing authorities, they're going to have to get together, the county and the city, and say, hey, we want to do this. Let's put it on the ballot in 2025. It gets passed. The tax amount that I roll off, the sales tax amount that I roll off 2024's millage rate, the sales tax came from 2023. Why can't I do 2024? Because we're not through 2024 right. We're still collecting sales tax. So the Department of Revenue works a year behind. So if this is on the ballot and it passes in 2025, they're not going to start collecting it. I'm not going to be able to use that tax revenue until the 2027 tax digest. Maybe the 2026. They might prorate it. I don't know. That's up in the air. But we won't see the benefit of this for at least a couple of years, maybe 3. But it's a good thing. It's on the ballot in November. And the reason I want to talk about that and stress it, I think it's a good thing. I mean, it's fair. It's what's called a fair tax. Anybody spending money, it don't matter what county they live in, if they spend money in Upson County, they're helping us pay our property tax, right? I heard somebody say the other day, I'll never vote to raise my taxes, meaning this sales tax. I'd vote for it in a minute. So, with,
Everybody
everybody
say the same.
pays, right?
Whether you rent, own, whatever.
Do you shop out of town? Do you shop in another county?
I do, occasionally, I'm
Yeah,
glad.
all of us do, right? I mean, we're just returning the favor, you know, and that's a good thing. Now, the governing authorities do have a one-time opt-out clause in this legislation. If they get up there and they start talking, saying, well, if we cap this homestead value at 3%, what happens when the digest increases 10%, we're only getting 3% of the revenue? That might not be a good idea. They can have an opt-out, but once they opt out, they never get a chance to get back in. So talk to your commissioners, your councilmen, and tell them what you think about House Bill 581. Any other questions about that? Shane?
If I'm reading it right, in your example, it says the 2020, if the proposed 2024 millage rates were adopted, that would be equivalent to 3.20 mils for the county and 6.19 for the city.
Correct.
And if I flip back here where the city M&O is 3.917, does that mean basically there would be no city tax?
How about that?
How about that?
Now,
That makes sense.
yeah, now, the only obstacle that would change that is if they limit it to maybe homestead property only, okay? We got to, nobody that I know of has seen the complete legislation on that bill. I don't even know if some of the legislatures look at it. But, you know, there are some ifs and ands on this thing, but overall it's a good thing. But I was talking with somebody from the city about that very thing the other day. It just about wipe out their need to have property tax. There again, it depends on who your leaders are and if they're taxpayer friendly. I mean, let me tell you this. I understand exactly where the county and the city are coming from trying to justify these millage increases. There's a lot that the public, the private citizen does not know about the operation of the county and the city. I work with them pretty close, and I mean, they really have to, you know, make ends meet sometimes, you know, whether it's of their own doing or not. But you got your salaried people that you have to pay that provide the services, right? We can't have, you know, services not attended to. And all the other services that go with the county and the city, you know, they have to have money to operate on. You just have to make sure you have people in place that are, like I say, taxpayer friendly. What was the question? Oh, okay, so he was looking at the millage rate. This 1 cent sales tax would come in, and I would roll it off the city's millage rate. They would make another $2 million. If you roll back that other penny, they pretty much have a zero millage rate. Follow me? Their digest, their 1 meal to them is only how much? $323,000. If they make a couple of $1 million off this penny sales tax, there's no need. You know, but there again, that's just in the generic form of that bill. There could be some fine small print, you know, that says, hey, you can only roll this off homestead property. I don't know. I hope it's for the whole thing.
How many, what's the population of the city and county?
I have no idea. I guess somewhere around 23 to 24,000.
Huh?
I'd say 23 to 24,000 countywide.
Well, might be off a little bit. What I've looked at in the past is it's heavy in the road. You said we got new people coming in, but people going out. It's been flatlined for a few years, 28,000. Okay. Yeah, you don't have any growth. Okay. What's the one thing that would alleviate all
Okay, now,
We don't have industry. We don't have a workforce. This new plastic company that's coming in is gonna be so great.
time out,
No, wait a minute, wait a minute.
time out, time out.
What?
This ain't about the plastic thing. I mean, I'm being, I'm being sincere here. We're not here to talk about what this plastic plant, if it's good, bad, what it's gonna do, but in your general comment, yes, industry would help, okay?
Well, I got a brother that lives in Newnan, 65. Anybody in Newnan, Coweta County, pay no school tax.
I'll cover that in a minute. I'll cover that in a minute, okay? But you're right, industry growth helps, okay? But the problem, this is the problem. Everybody wants growth, and I'm being for real here. If I hurt your feelings, I'm sorry. Everybody wants growth, but they don't want it in their backyard, do they? Is that a true statement or what? Yeah. Well, we got to find that good company. That is what I have seen since I've been in government. We want these apartments, but we don't want them there.
We want prisons, but we don't want,
Right. And look, we're a rural county, right? We can't be too picky sometimes. That's another way of looking at it. We got people trying to bring jobs in, and of course there's opposition, and then there's people for it. So, you take a shot in the dark. Yes, sir.
So, yeah, if I heard you right, you mentioned that not a lot of people know the details of how culture about anyone.
Mm-hmm.
Why is it not certain?
Well, put it like this, the ones that spread the information, that they give the information to, they haven't given us all the language in it yet, okay? I'm just going by the language I have, okay? Now, you can go online and look up House Bill 581. I don't know if they're going to have all the language in it. I'm looking at what was on the ballot when it went through the legislature last year.
We recently had about a $58 something increase, and they divided among electricity, water, sewer, and garbage. Looking at the tax increase, we're already paying more for services that, the increase, they said, the way they did it, people that really get paid as well.
Mm-hmm.
So 60 times 12, we've already had a $720 increase.
Yeah.
On taxes, so we kind of got county, city, and we got hit early on this.
Right. That's why I said this year, if you're a city taxpayer, it's tough. I mean, it really is. I mean, but it's reality. This is what's going to happen if all these millage rate pass, okay? I just want you to be ready. And while I'm there, and people say, well, Andy, they ain't going to work with you, you got to pay your taxes. I tell this to the same people every year. If you come in here with your tax bill in September and you can't pay it in full by the due date, I'll bust it up for you. I'll work with you, but I'm not going to work with you on a 12-month installment. But I'll help you out. We'll let you pay some in September, some in October. I probably shouldn't be saying that, but I want people to know that because I know the struggle is real. Just like the 93-year-old lady, So, any other questions? Yes?
Andy, you talk about the local option sales tax. Doesn't the county have a T-splosh that's in effect right now for transportation? Doesn't the county have an E-splosh?
School.
School E-splosh. So what you're saying is they also got this loss.
Local option sales tax.
$1 you spend in Upson County, 3 cents of that is going to these
Mm-hmm.
loss alone.
Right.
Outside of the rate of sales tax.
Right.
That's why we pay 8%.
Right. And if this gets added in, we're going to be paying 9 cents. But I don't mind paying 9 cents, if it's going to spread that burden out. Any other questions about what we've covered? I will talk about school.
At the meeting the other night, they said that the business taxes is lower than the house.
Does it increase your taxes? Probably not. Now, what you're referring to is an assessment issue, the commercial houses, all that stuff. I can't cover that tonight. I know a little bit about it, but I can't go there tonight. That's an assessor question.
Can I ask a question about Wednesday's paper, the front page of the paper? And read it all and go with the train depot?
That's the same thing I'm talking about. I can't go there. You,
Will those people's taxes be adjusted right, where mine is adjusted right?
I don't know. Hang on. We don't know yet. This is what I have learned. This is what I've learned is really important. You got to know both sides of the story before you make a judgment, right? You got to know both sides. You got to know all the facts. I don't think we know all the facts on that yet, okay? So get your facts and then make your call, okay? Let's talk about school tax. What did you say? Who has no school tax? Where? Coweta? Fayette? Henry? Yeah.
There's 4 in Fulton County. There's 4 counties there, but after 65, you don't pay school tax.
That's right. That's right. There's a handful of counties in Georgia that do not pay school tax. I've said this before, probably to people in this very room. Why do we pay school tax after age 65? Why do we pay school tax after age 65? Anybody know? Go ahead. I see you back there mouthing it. We have, like most other counties in Georgia, we have a high population of senior citizens, right? That's okay. We have a high population of senior citizens. So think about it like this. How many of you in here are over age 65? Get your hands up high if you can. Can you imagine every one of y'all not having to pay school tax? The school has to have their money. Hang on. The school has to have their money. They got a budget just like everybody else, okay? Now, let's suppose you did not pay school tax. Who's got to pay that? They got to have their money. Who's going to pay that money? Everybody. Who said that? Everybody else. What do Coweta, Henry, Fayette, and all them have in common? Industry is one of them. They have a larger working, younger population that's able to pick up the slack. That's the best way to put it. That's why Upson County and most other counties in Georgia, when you're 62, 65 and over, you still got to put some in the pot. That's why. Yes, ma'am. That's a good idea. You know who you need to talk to? The school board. That's a good idea. I do know this. On the school's behalf, I do know this. Last year I attended a meeting where they're considering increasing the school tax exemptions, okay? So, but we don't know yet. But I do know they're looking into it, okay? And like anything else that we won't change, what do you have to do as a citizen or taxpayer? That's right. You got to speak up. Sometimes you got to speak up more than once. Sometimes you got to speak up more than twice. That's what it took to get these homestead tax exemptions. Somebody spoke up about 3 times. Yeah. Every school in the state of Georgia, every public school, they have to have the, and that's part of, if you look at the very bottom of that second page on my handout, every school has to be at 14 mills to get what they call a state equalization grant. For Upson County, that's somewhere around $3 or $4 million. I don't know the exact amount. Yeah. Well, that's a good point. Let me stay on the school though. So they have to maintain a 14 mil to get that state equalization grant. And if you notice the last 2 years before this year, the school was right at 14 mils. So if they go too far below that millage rate, they don't qualify for that grant money of $3 or $4 million. So they got to do one of two things. They got to go deeper into the reserve, or they got to raise that millage rate up. Now this year, Andy, you just told us they got to be at 14 mils. What's the school tax millage? What's the school millage rate going to be this year? 13.6. Well, that's not 14. Are they going to be able to get their grant? Yes. You ever heard of title ad valorem tax? That tax that you pay when you buy a vehicle? The school gets 51% of that, okay? And the state says if you get this much TAVT tax, title ad valorem tax, and that makes up the difference in your millage rate, we'll still give you that grant. So that's a good thing. That's why they're able to come down. As long as people keep buying cars. They went all the way down to 13.2 a few years ago. It's because they had enough title ad valorem tax to come in to make up the difference. But to answer your question about the school, that's why everybody has to put some in the pot. Yes, they're considering more exemptions. If they're going to do it, I don't know. But that last piece of legislation down there that is not on the ballot this year, do I have a number on it? I don't know what it was, but I want to say House Bill 1031 or something like that, Senate Bill 1031. I know it was a House bill. It passed the House. It did not pass the Senate for whatever reason. What this legislation included for the school, it would allow them to go down to 10 mills instead of 14 to get their state equalization grant. Think about that. They get their money and they can lower their millage rate even lower. How does that help us? You see, for some ungodly reason, it did not pass through the Senate. I don't get it. I don't get it. Does that mean, let's say next year it's on the ballot. Now, I've heard that it's going to be on the ballot next year. It's going to be in legislation next year. You know, let's say it passes. You know, and that doesn't mean Upson County School is going to automatically go to 10 mills, does it? They still have a budget to meet, but it gives the schools the opportunity to go down even further if they need to. So at least they're given the opportunity, okay? And what do I have at the very bottom? The emails, contact info. Robert Dickey is our new representative, unless they change districts again. And then we got John Kennedy. Do you think reaching out to them makes a difference? Realistically, do you think reaching out to them makes a difference? I do. Absolutely. Beth Kemp, our previous representative, we talk quite often. She's the one that pushed our homestead tax increases through the legislature last year or the year before. She's the one that pushed them through. And she did it with encouragement from county officials. So it does make a difference. Reach out to them and say, hey, Robert, this legislation y'all are going to be talking about next year, how about, you know, looking into that? We really want it. And it's on his radar. I know it's on Robert Dickey's radar. But yeah, it makes a difference to reach out to them. That's about all I have, unless there's something I need to cover. Let me get.
How does that affect the county? Because I understand when you trade one vehicle for another vehicle, you pay avalon taxes twice on the same vehicle, or even more.
Yeah.
How does that affect the tax digest?
It doesn't affect the digest. It affects the tax revenue. They get more revenue. I mean, it's just like if I sold you my motorcycle and you you gotta pay TAVT tax on it. You turn around 2 months later and sell it to somebody else. They gotta pay TAVT tax on it. So what does that mean? More revenue, but that doesn't affect you as a property owner. As far as your millage rate, you know what I'm saying? It goes to their fund, the general tax fund. The school gets 51% of the TAVT, and the county and the city split the rest depending on where that person lives. If that person lives in the county gets it. If they live in the city gets it. But it's just a form of revenue. Now, of course, the state gets a cut too.
You talked about the split on the one block for sales tax, on the base rate sales tax, what's the split?
Base rate.
Yeah, I mean,
The other sales, I think all that goes to like the state and all them, don't it? Yeah. We got local option, we got T-Splosh, we got E-Splosh. Well, there might be one other penny out there, I'm not remembering. But yeah, the others just go to the state, I'm assuming.
And wasn't there a program that Beth Camp had at one time that eliminated by increasing the sales tax, that eliminated all school tax?
That's kind of what this is, what I was talking about. Not all school tax, but it allows them to lower the millage rate.
And I thought there were counties across the state, there were some counties that, but you know, we went to that meeting at, EMC.
That's what this was about.
I brought that up about increasing sales tax, and I spoke to the school board about that.
Yeah.
About increasing the sales tax to eliminate the school tax.
Oh, okay, yeah, I see what you're saying. I don't know about that. I mean, the school did ask me on this House Bill 581 if they'd be able to add a penny. I don't believe it includes the school. It's just local governing authorities. Works just like the regular lost penny now. Thanks for coming. Okay, well, that's about it. I appreciate everyone coming out. Spread the word.